Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up, your weekly edition, one I haven't done in about a month or so here on YouTube, but here it is for August 27th, 2021. So kicking it off and getting back into the fall and winter seasons, if you will. Interesting day. You know, I have been telling you during the week that I did not think the Fed was going to give you what they're going to do. They're not going to say at this meeting, oh, come the week of September 15th, we're going to begin doing such and tapering and blah, blah. But what the Fed chair did do is he said that, yes, they have discussed the tapering and he would expect it would begin this year. They are still keeping their eye on the COVID variant, watching the statistics there. But that's all he said about COVID. And that's all he should have said. He's not a doctor, so he's looking at the impact. But he's now joined the camp with those that want to taper. So the question is when. Then he did something that the market wasn't ready for. He decoupled raising interest rates with tapering. He said the raising of interest rates is not dependent on the tapering. In other words, that tapering go on, and just because it ends, let's assume it ends sometime next summer, whatever it might be. I don't know the date because I don't know when they're going to begin. Then I have to know the amount that they're going to give us when they tell us. So that's still to be known. So it could be anywhere between, I don't know, next spring and summer. I'm assuming it'll end. That doesn't mean that interest rates are going to rise right away. And the Fed still thinks that the surge that we've seen in the inflation, a lot of it is transitory. This was the go signal for the metals. Okay, Fed's not going to stop us. They want the inflation. It was the go signal for the stock market. And now even when we get the jobs data, which will come out next week, so what? We know they're going to begin the tapering. You've just taken the importance of it off. All it can do is add, in my opinion, more fuel to the fire for bullishness in the stock market. Better jobs data, no interest rate hike, and tapering is going to begin. You may not agree with me, but that's how I'm viewing it. So when I look at the S&P, if you go back here, I mean, it's fun to look at a monthly chart, especially when I haven't shown one here for a month. Look at that move. I mean, it's mind-boggling. It's 2,000 points, almost in a straight line. It's rare that on this line you got much of a dip. Do you agree? It stayed over the 18-month moving average. You've stayed over the 18-week moving average. You had this one bleep, and that was back last October, and that was it. You have to go back here, way back to April, before you were back under it. This is one of the greatest commodity boom runs of all time. You can call it a futures contract. I'd agree with that grammar better than a commodity, but right on to the upside. When you take a look at the weekly bar chart, well, it's pretty evident. You get the breaks in the market and they're buying opportunities. How does that look when you look at the 18-week average? All you've done is fall back to it a couple of times. Here you got under it, didn't stay there. Remember the daily charts that I was showing you? And I said, you get under those numbers, folks, you stay with the pattern. That is a washout that comes back and often makes a new high. Did I think it was going to be this fast this week that it happened? I must tell you no. Last week I felt like I was in the toilet as the breaks happened in the market. And now, when you came up this week, and take a look, you have an outside week down. Now you take out the high of that. That's just raw power. You've caught a whole group of people here that were bearish in the marketplace. What else? Well, my guess is you're going right now to the upper Bollinger Band. Right now it's 45.26. It'll be a little higher than that, I would assume, knowing how the formula works here when we reopen Sunday night. But that's what I'm looking for at a minimum. And what have you done this whole time? The momentum in the slow stochastic has stayed embedded. If you've taken my enhanced Bollinger Band course, it's on the website at www.iraepstein.com under education. This is what we talk about. This keeps you away from the noise. You know you're looking to be a buyer on the breaks until it goes away. While I haven't been doing these during the summer, I wanted to take some time for myself on the weekends. I have put out all the time for my paid subscribers their weekly edition of their daily videos. And I've shown them the importance of it and how on the charts, how some of the indices have never given up their bullishness. Obviously, the weakest one was the Russell. You know that. I know that. In the NASDAQ, fully embedded over the 18-week. Just keeps cranking out new highs. The Dow Industrials, well, now you're into resistance at the upper Bollinger Band. You didn't take out last week's high of 35,547. You're just shy of it, as you could see. I would assume it's going to be a challenge right away. Could we, over the weekend, traders say to themselves, you know, as bullish as the market was and did it, maybe it got overdone on Friday and the market wants to pull back? Of course. But you have that embedded reading. I think the pros are just laying in the woods to keep buying the market. And the Russell did something. Now, during this summer, what have we really been doing? Remember, this is the May time frame here. You've had lower highs, lower lows. You've stayed basically sideways. And each time through here, as you broke down, you found your support at the lower band, but you didn't make a higher high. You didn't come back and do anything. This week, for the first time, you took out a prior high. You have higher lows. You're over the 18-week, and momentum is turning up. The chart has changed. And until you take out 2108, what was that last week's low? 2108.70. I'm friendly, looking for a challenge of the upper Bollinger Band at a minimum. Take that out, and I'll have to rethink my ideas. In the bond market, we're in a stall. The pattern turned into lower highs, lower lows. So bearish there. Countered by the fact that prices are staying over the 18-week average, which means bias is up. How do I determine bias? If the market's over the 18-month, 18-week, 18-day average of closes, in this case it's the 18-week, the bias is up. It's a filter. So while the trend is down, the bias up, the two wipe out each other, and you have a market that, if you look at it, is just overbought. It's not embedded. In the 10-year note, everybody's worried, where's this going? Well, if you really ran the nominal rates and the real rates where they're at, it should be in the 1.3s, and that's where you're at. You're just sitting there, and it's about where the market's at this point. It doesn't have to move anywhere unless the marketplace decides the Fed's wrong and it's got to move interest rates quicker. The Fed, the man that makes the decision at the end of the day just told you they're in no hurry. No. They're going to taper and see what the market looks like. It's going to become data dependent again. That's what he basically said, and said tapering doesn't have to lead to higher rates. That will be determined by market factors. They're watching full employment, and they're watching inflation, and they want inflation to stick, not be transitory. So you've got lower highs, lower lows, but you're staying over that. The bias is up, you're neutral. Dollar, you get up to upper Bollinger Bands, and I'd look for resistance. Now, did this market embed? Take a look with me. Both numbers have to be over on a closing basis at the end of the week 80. They were today, and darn it, they were last week. But they weren't the week before, which means they need to get that this week. Coming in, will they have pressure on them this week? Generally speaking, you don't get a bullish embedded reading in the dollar. Go back. This is 2020. So the odds favor it won't embed again. And if that's the case, it slips a little, maybe foreign currencies get the bet. Embed, and we recognize there's been a difference in that, then the pattern of the upper Bollinger Band and 100-day average come into play. Eurocurrency. Well, this is trying to embed on the downside, or did it? You have both numbers under 20. Last week you had them both under 20, and by God, you had them there under 20 and the week before. You've been embedded. So now, does it lose it or keep it? It also means to me on the rallies, no, this is going to be, you'll say, well, what? How is he talking the dollar one thing, the euro the other? I think this gets sold. Lose that red line over 20, and I'll change my opinion. Don't lose it, and I think that in this area here is where I'm looking for the market to run into resistance. Canadian dollar, oversold down to the Bollinger Band, but still in a downtrend, but oversold, and has hit a bunch of downside targets. Could it drop further? Yeah, if it does, then I'm looking for 76.66 to 63, but it's saying I can't really stay under that number. That's what it's been telling us. In the Japanese yen, could this be where the yen rolls over? I don't know. You've got a pattern of lower highs, lower lows, but if you look at the settlement, you're right on that 18-week average. I wish it had been under it or over it enough. 0.0002 doesn't tell me anything. I'll wait to make a decision. Bitcoin, even though you had a drop back just the other day, this market's just powerful on the weekly charts, but it's very overbought. Got to use some caution now. The differential between Brent and WTI. Well, the first thing is we saw a stellar week. You were up 11% this week in some of the energy contracts, down 7% last week. But the differential's been strong. Why? Because the U.S. is going to sell 20 million barrels of oil out of our strategic reserves. That's very important. Number two, our refineries are getting ready to go into the conversion where they'll start doing the winter blends. Well, when you do that, you don't buy oil because it takes a couple of weeks to convert a refinery. Keep that in the back of your mind. So you can get products that are strong because you're not getting more product made, but do you really buy crude oil? Okay, you're not. And yet the market's going up, but it's Brent that is the big mover. It's come back to the 18-week average from the depths of you-know-what. As I said, up 11.5% this week. Last week it was down 7.66. That's a pretty big bounce. Back to neutral territory is what I'd call it. WTI still in a bearish trend. Neutral territories, the 18-week average, are up 10.3% this week. Last week you were down 8.94%. Wow. Big moves. Crazy action, but still overall bearish pattern there, not a bullish pattern. Gasoline, what do you do the first times you hit a lower Bollinger Band? Take my enhanced Bollinger Band course. Classic what I teach on that chart. So you put it all together, it's an interesting week. To me, it's very exciting. Now another part of the puzzle is known, and I think it opens up the door for a fabulous fall and winter trade. Now, if you're interested in seeing what I do in terms of actual buy and sell recommendations, I do it in my morning futures video and in my full research. Now, the morning futures video is just that. It's a video I record in the morning, but I update in writing what to do after I put out recommendations here twice a day in my written updates, and sometimes 3-4 times with special updates. So I'm forever on top of the market, telling traders what I'm seeing, but they get to see the morning picture because I go through the charts. I'll go through weekly and daily charts. Now, Monday through Friday, it's primarily the dailies. Weekends, and even though I wasn't doing these free videos, I was doing them all the way through for my weekend paid subscribers, and they were getting that. I cover all these different markets and futures. And you'll say, well, it's a 20-minute video. If you're on our website, we have a scroll bar. You pull it. It'll light up and say you're in interest rates, you're in the meat area, you're in softs. I want to go back to stock indices. Tells you right where you're at. No guessing about that whatsoever. It's inexpensive. It's a great way to start this. $7.95, 24 videos that month. That's what it includes. 5 a week, Monday through Friday, 1 on the weekend when there's not a holiday. I want to make that clear. After that, if you stay with it, it's $15, or you can buy a 1-year subscription up front for $13 a month, all paid up front. It's a pretty good deal. You get an awful lot of information. Just go to our website. Look under the word research. It's all there. If you have questions, call our staff. I'm Ira Epstein. You have a great weekend. I know I'm having one. And I will talk to you come Monday.